Okay, guys, thanks for that. So the sound's working fine. You can see the slide. That's absolutely fantastic. I'm just getting set up here. What we're going to do is I'm just going to go through what we're going to talk about today, what we're going to cover. There's only three real main segments to the webinar. If we can save questions till the end, we'll look at that in a moment. So basically, the topic of this webinar is demystifying fundamental analysis. Okay. And what this essentially is I'm going to show you how to simplify the process. A lot of people will tell you, and it looks like some people have been telling you from the comments, that fundamental analysis is either irrelevant or complicated or something that only the big city professionals can kind of manage. But what I'm going to do is I'm going to show you how it can be so simple. And I'm going to simplify that process, and basically what I'm going to do is I'm just going to share with you how I trade. Okay, so let's just take a look at what we're going to look at in today's webinar. So first we'll begin with who I am. It's important to know who I am, so you can know why to listen to me or whether to listen to me or not. We'll go through my background, we'll go through where I started, my journey and where I am now, and that will bring in the relevance, the other stuff. Then we'll go through how I trade, okay? And this is the meat of it, basically. I'm going to show you exactly how I analyze the fundamentals, and I'm going to use trade examples. Okay, so I'm going to use a couple of trade examples, a trade that I'm in right now, in fact, and then I'm going to use a longer-term trade example to show you the methodology in action, and how such a simple process can be implemented. Okay, and then finally, there's an interesting opportunity here. If you're interested in trading clients, if you're interested in becoming getting more involved in the industry, there's going to be a kind of little segment on the end about that. So kind of an opportunity to get more involved with that if that's what you want to do. So essentially, and then of course we've got the Q&A at the end. So essentially, this webinar is for two types of people. Either you want to learn how city traders trade, professional fund managers trade, or you want to learn how fund managers trade and then have the opportunity to possibly look at trading client accounts and working with us and all kind of other cool, exciting things like that. So let's get going, and we'll start with who I am. Okay, we'll come to all that as we go through. So first of all, who I am, what am I about, what's my journey, etc. Well, I started as a retail trader in 2005. So a lot of you guys probably can relate to that. I can relate to your journey probably, and what that means is that I began trading just after seeing an advert online. I basically, my dream was to travel. I wanted to travel the world, and I thought, you know what, if I can make money online, this could be a good way to travel and have the freedom without having to worry about earning an income. So I found forex trading. I thought that could be a good idea. It was very intensive, it's very difficult. I went around in circles for a long time. And basically my whole journey was searching for the Holy Grail. Basically, I was searching for some strategy, some technical strategy that would give me entry signals, exit signals, stop loss placement, all that stuff to make it really simple so I could come in the morning, turn the computer on and just make profitable trades on a consistent basis. So that's what I was looking for from that time. Now it was a very difficult time for me, like I said, and my trading turned around when, basically, to cut a long story short, I met a professional. Okay, now I know this guy. I was introduced by a friend, and this guy, he wasn't a hedge fund manager. He wasn't anything like that. He literally just traded his own money. Okay, he worked from home. He had this really nice house. He had a really cool car, and I knew he was genuine because he literally didn't do anything else. He had this money and he just traded it, and he was always talking about the markets and what trades he was in. And so obviously I was curious because I was struggling at this point. Okay, so I was like, well, what is this guy doing? What strategy is this guy using? Maybe I can use it. Now he didn't trade forex. He traded stocks. Okay, he trades UK stocks. But essentially, I was thinking, what's his strategy? It still got me fascinated and intrigued. I'd never met such a successful trader in real life. And he basically frustrated me at first because he would just say, things like. That he focused on the fundamentals, and if he thinks the price is going to go up to a certain level, he'll just get in. And well, I was like, well, where do you get in? What's your trigger? you know, what's your strategy? That's the question I kept trying to answer. And he would be like, well, there's no, you know, if as soon as I feel that the price is going to go up, I'll just get in, because there's no real specific entry or system. Because if you've done your analysis and you've got the direction, you know the thing's going to go up, you've got the good reasons for that, you know which price it's going to get to, it doesn't really matter where I get in. And that kind of piqued my interest then, because I was like, okay, that's interesting. So over time, I gradually tried to follow the same steps, the steps that I'm going to show you in a moment. I was like, you know, what are these steps? So I started applying them. Okay, and within a very short space of time, just a few months, I started trading a demo account. Obviously, I didn't just go all in. Started trading a demo account, and in 6 months or a few months, I was very, very successful, to the point where I would get out of bed in the morning, I would have a shower, and I'd just be like, you know, I wouldn't know how many pips I'm going to make today. Well, it was like, it was just become a completely different game. It was no stress. It was very, very simple. I'm not going to say it was easy, because trading is not easy, but it was much, the process was simplified, and I could suddenly see the light at the end of the tunnel. Okay, so he was a short-term trader. You know, he would have, you know, like trades for the year that he would put on that you think would play out over the year, but he would also have lots of little intraday trades and short-term trades. I would say he probably wasn't a day trader, but he traded, like, you know, he closed his position after a week, maybe two, something along those lines. So he was quite short-term. Okay, so that was where I started out. So I've obviously used these methods, I replicated them, and I applied them. I became quite successful, okay, to the point where in 2008 I began trading professionally. And what happened in 2008 was I was introduced to a guy who I had a Skype chat room, like a trading room. So I was trading away, and I had a little slot Skype room, and I was sharing my trades. And it's really funny how word spread, because before, literally in a few weeks, I had like 40, 50 people in this Skype room, and we were all there chatting away. And it wasn't for anything in particular; it was just to keep me company in the day. So I was, you know, in that room trading away. Now, unbeknownst to me, one of those guys had ambitions in the industry, and his ambition was to set up a small hedge fund. Okay, he wanted to set up a fund and do that, so, which he did. And because he would been in the room and he'd been kind of talking to me, he basically asked me if I'd like to be one of his traders, which of course was, at my point in time then, was an absolutely fantastic opportunity. Now this fund literally was a startup, very small, you know, only 2 or 3 million under management, nothing big. Yeah, just some seed money, but essentially it was a very good place for me to start. So I was very excited, and that was what began my professional trading career, effectively. Now I traded with the fund. Now the problem with that is that the fund, the way the structure worked was I obviously got a share of the commissions. So I was trading and I was making profits, and there was a few reasons why I left, but I decided to leave in 2010. The main reasons were the fund was being traded as a pot. Okay, so there's 2 or 3 traders trading it. So for example, if I made, you know, say if I made a profit for the month, but the other traders lost, then I wouldn't get paid, basically. It was a very, it wasn't an ideal scenario. And the second reason was, if I'm doing really well, instead of taking like a fraction of the percentages of the performance fee, I could be taking all of it. I'll get my own clients, I'll set up on my own. You know, all you need is a set up with a broker. It should be quite simple. It was quite simple in those days. Okay, in 2006 to 2008, literally, some of you guys who've been in the industry a long time will know that you could literally in those days just set up with a broker as a money manager, bring your clients in, and that was that. They'd sign a form, and that was that. Very simple. Obviously, since the financial crisis, regulation became much more strong. Okay, so regulation became stronger, and I went away and started trading my own clients. So that was in 2010, and I traded managed accounts. That's when I got into the managed accounts business, because on the surface, it was the perfect investment. It was safe, it was secure. The client didn't need to give me their money. It was a very easy product to sell with the performance that I had. Okay, so I did that, and that was absolutely fantastic. Now, bearing in mind, before we go into this, this isn't going to be a PowerPoint presentation for long. I want to move off the PowerPoints as quick as I can. So just for this first section or two, we'll be on it, but we'll get off onto the charts as soon as the timing's right. Now, 2010, trading managed accounts, that was going very well, but of course the issue of regulation came up. I needed to be regulated, or the broker basically said, you either have to be regulated or we have to stop you managing clients here. And every broker is the same. And in fact, now, if you try and manage anyone's money at a broker, you won't be able to if you're not regulated. That's the situation now. But in 2006, 7, and 8, it was a completely different story. So that changed. So I needed to basically find a way of becoming regulated, which in the UK costs at least £500,000. You have to, I think, have about £500,000 as a float, just as a float. So it's not money that you use; it just has to be sat there on hand, which at the time I just didn't have. And then obviously the fees are very expensive. So I was kind of debating how I could go about doing this. And my broker introduced me to a company that was looking, that helped traders in this situation. So in 2012, I decided to go from being on my own, training my own managed account clients, to joining a company called Smile Global Management. They're a regulated, FCA regulated investment management company based in London, in the UK. And they basically said, you can bring your clients over here, we'll regulate you, we'll monitor you, we'll make sure you know everything's above board and you're not going to take too much risk, etc. But essentially, if you keep trading like the way you're trading, you know, we're happy to have you on board, and you can just, any new clients you get, you can bring them on and you'll be fully regulated. Now, of course, I had to pay them for that. I had to pay a fee for this. It was fairly expensive, but it wasn't as expensive as becoming regulated on my own. So that was fantastic, and again, I carried on growing my business, and that became very popular until this year, in 2014. And this story leads to what we're going to talk about later on. I basically became head of FX, and they made me a partner in the business because essentially what had happened is they were now putting, all the different traders came and went. I was the one who was there, and all the clients came in. They would basically plug them into my strategy. They'd say, Jarratt, do you want another client? I'd say, of course, obviously. Over they'd come, until eventually I'm managing a significant portion of the funds. Now, the problem with that from their perspective is that if I leave, like I did before, or if I just stop trading for any reason, they'd be in a little bit of a tricky spot because, you know, they've lost one of their biggest strategies. So they wanted to kind of entice me to be on board as more of a partner. So instead of having a big slice of everything I make, I have a smaller slice of everything as a whole, which is much more attractive to me financially and much more attractive to them in terms of having a more stable business. Now, what they wanted me to do is they wanted me to build basically a trading team that we could trust, that was on hand, that would trade the managed accounts, would take over those managed account trading, and essentially run that whole division, which is what I do now. So I do trade still, because it's only very new over the last few months. I am still trading, but essentially that is my bigger role at Smile to do that. Now, during that time, okay, I became ranked as the second best FX trader in the world in between 2008 and 2013, so to this point at the moment. Now, the way that happened is, if you want to trade for clients, particularly in a regulated environment, you have to have performance. You have to have verified performance. So that doesn't mean it's a spreadsheet saying, oh, look at the trades I've taken. What that means is you have to have your accounts investigated by a regulated accountant, let's say accounts firm, an auditor basically, but the best way to describe it is an accounts firm. They go in, they look at your risk management profile, they look at your performance, they go in and they just compare, they take all the data from your account, they basically have full access over your account so they can make sure that everything is above board and as it says it is. So obviously this was a natural thing I had to have to get clients. So I got the clients, and then I was uploading to something called the Barclays Currency Traders Index. Now, the Barclays Hedge database is basically the biggest hedge fund database in the world. If you Google hedge fund database, it will come top of page one. Okay, it's the biggest, by far most reputable one. So obviously I wanted to be on there because that's where clients are looking for traders. Okay, whoever's ranked number one, incidentally, just in case you're wondering, that was I think it was a Swiss. It was either Swiss or a UK firm. It was a firm. It wasn't an individual trader like me. It was a firm. So that's what I did. Now I was reporting to Barclays obviously since 2008 because I knew the importance of having everything verified. And they contacted me sometime in 2012, just after I joined Smile, and they said, you know what, I've looked at your performance. We've got it on the database. Your performance is pretty good. It compares very well to all the other currency traders. In fact, you're currently sitting at about second on the ranking. Now, what we can do, if you like, we can then make that official. We can then, confirm that to people. The stuff's been verified and ranked, and that could help you get clients. Obviously, I was going to take that. That's what led to me getting the ranking from Barclays. So that was how that all played out. And then, of course, as I just mentioned, all my results are fully audited and verified, which is very rare in this industry. So that's my background, that's who I am, that's what I'm doing. So I basically work in London, we do the managed accounts, we do also manage funds. We have a fund that we manage, which I'm basically trading. And now the managed accounts are in a situation where we want to, grow that and bring the new traders on board and train them up, etc. So that brings us to the next section. So that's me. That gives you a good understanding. So that brings us to the next section of how I trade. This is what you've come for, basically. This is what you've come to learn. So how do I trade? What changes did I make in my strategy to make me so successful? Okay, this is what I'm going to answer now. And then what I'm going to do is I'm going to go through it and I'm going to use trade examples so that you can see it in action. You don't have to listen, you can actually see it in action. So we've got two types. This is how I trade. And obviously we haven't got all the time, we haven't got a lot of time. So this is going to be fairly short presentation, but you'll get a very good idea by the end of it. So what we're going to do is we're going to look at the two types of analysis that we need to use. This is what I use. I use something called fundamental analysis and something called sentiment analysis. Now, we're going to go through each type. Fundamental analysis basically is long term. This gives you the big picture. Which way is the pound going to go over the next 12 months and why? Fundamentally is the reasons why. That's the key. This is why, basically I spend a lot of time kind of dismissing technical analysis, and a lot of people get very defensive. And it's not because I don't think technical analysis doesn't work. It's not just because I think it's useless and I'm not interested. The reason I dismiss it as a viable way to make money in the Forex or any trading market is because it's very difficult to have the same kind of confidence in your strategy. So if you've ever, I'm not sure whether you guys have had this, but if you've ever swapped from strategy to strategy, you bought one strategy, then you bought the next strategy, and then you bought another strategy, then you've tried to make your own strategy, whatever it is, just going from thing to thing, that's basically reveals a lack of confidence in what you're doing, effectively. And that's why these strategies never last that long. So fundamental analysis, for me, gives you that confidence because you understand why the market is moving the way it is. That's the key. Sentiment analysis is exactly the same, except it's much shorter term. Okay, so instead of the big picture over the next 6 to 12 months, sentiment analysis gives you what's going to happen today. So what that means is you could have a situation where fundamentally the pound is going to go up, but the sentiment for today is that very much it's going to go down. And again, it's not just random, they will have clear reasons. So there will be clear reasons why the fundamentals say up and very clear reasons why the sentiment says down. Okay, and you can, if you're a day trader, you want to be trading the sentiment with the fundamentals in the back of your mind. If you're a swing trader or a position trader, you want to be trading the fundamentals with the sentiment, one eye on the sentiment. Okay, so they're the two ways we trade. Now what we're going to do is we're going to go into more detail, like I said. So fundamentals we'll start with. Effectively, this can be broken down and really simplified to one point: central banks. The central banks dictate monetary policy. Therefore, they dictate which way the currency will go. Okay, they give us data points. Right now, for example, the Federal Reserve of the US has made it clear over the last few weeks and months that employment data and inflation are the two key areas they're going to be looking for when judging whether or not to raise rates. Very simple. So that means you can ignore retail sales, you can ignore consumer confidence, you can ignore all those other data points. We only care, when we're trading, we only care about employment and inflation. Now, because there's been such a if you know anything about the data, there's basically been a very good momentum now built up in employment data. We've had good NFPs over the last few months. Last month wasn't so good, but generally over the last 6 months, NFP has actually been quite good. Okay, building. This has caused traders to say, you know what, the central bank are probably going to raise rates, and hence the dollar rally, the relentless dollar rally that's occurred, which is expected to continue for the next few months unless those fundamentals from the central bank change. Okay, so as you can see, they give us the clues we need to trade the market. So that's what fundamentals is all about. So you don't need to worry about it being complicated. You haven't got to know all about GDP and debt ratios and all this stuff that you think might overcomplicate the process. All you need to do as a Forex trader is focus on what the central bank is saying, and they will even give you the data points that they're looking for, so you can look and actually even second guess the central bank and start getting into the market before the central bank even make an announcement. Okay. So, for example, with the Fed, if they've said about they're looking at employment and inflation, employment starts getting better and better and better. Traders are now jumping in the market long in anticipation of the Fed changing their tone and saying, yes, this has been good, we're now going to look at raising rates. That makes sense. It's very, very simple, but very powerful. Okay, so that's fundamental analysis. That gives you the big picture. Okay, so when the bank change their mind, that sends the currency in the opposite way. And again, another little example of this is the New Zealand dollar at the moment. Going into the first half of 2014, New Zealand dollar was rallying relentlessly. The reason? Because New Zealand was putting rates up, okay? Now it's falling relentlessly. The reason? Because in August, I think it was, the Reserve Bank of New Zealand have physically started selling New Zealand dollars. They're trying to force it lower. They don't want it any higher. They want to force it down, okay? And that's why the New Zealand dollar is now falling. But if you were watching and paying attention to the central bank, you'd know these things and you'd know which side of the market to be on, or you'd have a very good understanding of which side of the market to be on in the long term, okay, over the next few months. So that's just a few examples. Now we're going to look at some trade examples in a moment. Before we do, I just want to cover the sentiment, okay? So sentiment is of course short term. This is what you want to do when you're day trading. This is where the news calendar comes in and comments and stuff like that. Now, a common myth that people have with the news calendar is that they say, well, you know, we had some data today and I watched it and it came out good and it was supposed to, you know, it came out green, positive, but the currency fell. So obviously that shows that fundamentals are useless, doesn't work, you know, because if it's good, it should go up, right? Which does kind of make sense. Whereas if you understand the nature behind those moves, if you really know what you're talking about, basically, you will know that the market is very often looking at very subtle clues. So for instance, an example of this is what happened on the pound in, I think it was July. Back in July, the market had actually just had some very good UK data through the week, but the pound kind of wasn't really moving. Then the Bank of England, okay, so we had average earnings come out, negative, and the Bank of England then the day after, we had some more data which came out positive, so and again the pound went down. Now the reason for that, you look at the calendar, you think it doesn't make any sense. We had one little minor announcement which was average earnings which came out weak, but everything else has come out good, so why is the pound falling? Well, the reason was because the day before the Bank of England had said, they'd said in one of their speeches that we're not interested in any other data points, all we're looking at right now is average earnings. They actually said average earnings. Well, of course, when average earnings came out weak, what did the markets think? It doesn't really matter what the other data is doing, because the one thing that the bank are really caring about in terms of raising or lowering interest rates has just come out negative. So there's no way they're going to raise rates. So down the pound went. So when you understand the story, the backstory, how to tune in and understand these things, it becomes much simpler. It will be like a breath of fresh air for your trading. Okay. Now, the final thing that we're going to go through is I'm going to show you the step-by-step process for understanding the and the sentiment. Okay, we're going to look at that at the end, but first of all we're going to go through two trade examples just so you can get the idea of how these things work. Now the first one, I'm going to leave that there and I'm going to try and share my screen here, so just bear with me please. Okay, so you should be able to see my chart in just a second. There we go. Now, this is a trade on the dollar CAD, okay? And you can see I've gone long dollar CAD, and the price action looks like it's going up. But I'm going to give you the reasons why I went long, and you'll suddenly understand why we did this, okay? Now, to do that, we need to go through the backstory. So let me just share a different application so we can go through this. Here we go. So let's look at the Canadian data today. We had Canadian GDP. It was expected to come out 0.2 versus 0.3. So expected to come out weaker. But what's the backstory? Well, this is just a report that I do. This is just a trade report that I do for every session, basically, which you should be able to see in a moment. Not sure if it's working here. Let me just. There we go. There we go. Okay. Now you can see just do a quick trade report, and effectively this is the summary that we have. This is basically what the traders use. Okay, the screen will show in a moment. Z, I think you can do that. If you want to enlarge the chart, I think you guys can do that yourself with the full screen button at the top. There's a little full screen button at the top of the... Yeah, there you go. Okay, so what you can see is this isn't just a thing like, oh, this is what the Canadian GDP is expected. Look at, we read the summary, and this is the section that was the most important to me. The Canadian data is slightly irrelevant as Governor Pelosi, that's the Bank of Canada governor, has stated he's not going to raise rates. Even if the data is amazing, he's not going to raise rates. So therefore, Canada is well behind the rest of the Western world in hiking their rates. So that means the dollar are getting closer to hiking rates, Canada are getting nowhere near. There's a central bank divergence, so fundamentally this pair should be going up. Okay, and if we look at the data, we can see that the weak data will exacerbate that. Okay, so if we can see the expected market reaction, bear in mind this is, you know, I've kind of written this yesterday. If this data comes out weaker, we expect dollar CAD to reach those highs we've seen in the last 6 months, past 112, etc., 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 because the Bank of Canada are backing that up. This is basically give an opportunity to buy dollar CAD. So let's go. So that was the preparation. So we knew this. Basically, the point I'm making here is we knew this figure was coming out on GDP. We knew, most importantly, that this is the figure we need to pay attention to. So you look at all the figures came out today on the calendar. There was only 2 that were market moving and of relevance. That was the European CPI flash estimate and Canadian GDP. All the rest were irrelevant and not market moving at all. But we knew this ahead of time. That's my point. Okay, and this is how fundamentals work. So essentially, we knew, because of following the central bank, and we'll give you the steps for doing this later, because we were following the central bank, we knew what the situation was on Canadian dollar. We knew what the current situation was with that regarding the data, which data was important, which wasn't. This data point was only relevant if it was weaker, and we knew what we were going to do if it did come out weaker. Okay, so if we go back to the trade, just a second, here, okay, you guys can see I'm in this trade. I actually went long dollar CAD. Now the blue box here is the point where the price was before the news came out. Okay, so you can see the price spiked up. Now when you get the news spike, well, you've got 3 options for trading the news. Okay, and I use all 3 options. Option number 1 is you get in before the figure. Now on this one, this would actually be an ideal event to do that. I didn't, because I was I just didn't do that. I wasn't at the charts at the time. I wasn't trading at that time. But essentially, one of the options is to get in before the event. Because of the fundamentals on the CAD, we know the CAD is going to weaken. We know the dollar is going to strengthen fundamentally in the big picture, right? So even if the data comes out better than expected and the price falls, it doesn't really matter, because we know ultimately dollar CAD will be going up if the fundamentals remain in place. Okay, so obviously we have a stop loss in place, because if things change midway through a trade, you know, you only lost a certain amount. But essentially, that's option number 1, get in before the figure. Option number 2 is to get in after the figure. Now, the first way of doing this is to trade the pullback. So you can see the price spikes up here, and then all we do, very, very simply, it's very simple, we just wait for the price to pull back into the Fibonacci zones. Okay, and I'm not saying you go for the 50% or the 30%, it doesn't matter which one, just look at those fib zones as a zone. Okay, and if the price pulls back into that zone, you get in long. Okay, and if you want to put a stop loss in, you basically just put a stop loss below this low, basically where my stop loss is there. Okay, but if you wait for the pullback, the benefits of that, you get a much smaller stop for much bigger profit potential. The negatives, of course, are if the price does carry on going, you never get the pullback and your target gets hit without you getting in. Okay, now that's the option I went for. I decided to get in because I felt that this thing could motor, because it's got a good solid strength behind it. I thought, you know what, this thing could motor. It didn't. It pulled back, which is fine. The point is, this single trade is irrelevant. The point I'm making is that we can identify the points on the calendar to give us the sentiment for the day. We knew dollar CAD was going up, particularly if this CPI data was negative. GDP was negative, which it was. It came out as 0%. Okay, you saw that on the calendar. So of course we knew, even if I didn't get into this trade, this was the sentiment for the session. For the entire New York session, this thing is going to be supported. If it dips, they'll buy it back. If it dips, they'll buy it back. Okay, keep it really simple. That's the only thing I was focused on this afternoon in today's New York session. Okay, very, very simple, based on the sentiment. So that's just one example of the sentiment in action. Now, with this trade here, you can see I'm basically looking for I'm basically looking for this to hit just below its hold highs. I actually think it might get up above to 113 eventually, but for now I'll be happy with if we could just take 50, 60 pip profit. That'd be nice. But as you can see, it's a pretty simple strategy. There's no complicated method to learn. All you need to focus on is tuning into those fundamentals and understanding them. And again, I'm going to simplify the process for you in a moment. So I'm going to give you step by step, okay? But essentially, that's how you trade sentiment. That's how I day trade, okay? And I thought it'd be cool to use an example I'm in right now because it's there, isn't it? So that's that, okay? Now, the next one I'm going to show you is a longer term, the fundamentals, okay? The longer term view on the fundamentals, this gives you the big picture for 6 to 12 months, okay? Now, what I'm going to do here, this is all well and good me showing you a trade I took, right? This is all well and good, but essentially it's no good if you can't do it. So if I'm just some kind of genius and it's only me in the world that can do this, then it's useless to everyone else. So what I want to show you now is that it's not that difficult to determine, and I want to show you that these moves, particularly the fundamental moves, give you plenty of time to get in. Okay, plenty. I'm talking months, right? So let's just have a look at an example. I'm just changing my screen share. And you should, in a moment, we'll look at our second example. This is a longer term position. Now this is on the dollar yen. Okay. Now I'll just give you the backstory. This is a blog that I wrote. You can see the blog that we posted. We post this all over, not just on the blog, post it all over the forums. This wouldn't be difficult to find if you wanted to. I posted this on June the 12th, 2013. Okay, so last year, longer than a year ago. And what was I saying? Effectively, I was saying dollar yen's going up. Okay, and if you look at this paragraph here, you can see it's important to remember that this path of action caused the price to rally up over 1,000 pips since the start of April 2013, while I firmly anticipate the pair reaching 110 over the coming 12 months or so based on these fundamentals. Now, dollar yen hasn't quite hit 110 yet. It's getting there. It's about 30 or 40 pips off, I think, last time I looked. So, I mean, I'm going to just say it's got to 110. You know, if you're going to call out over 30 pips, then fine. But the point is, when I wrote this post, I think it was down at 95. If you check the charts, check the dollar yen charts, you can see I think it was about 95 to the dollar. Okay, and I was calling for this thing to rally because I knew it was going to hit 110. Why did I know that? Because the Bank of Japan started printing money like the Fed did, and the Federal Reserve started talking about tapering and ending their own QE program. So remember what we talked about. The two central banks were going in opposite directions. There was a clear central bank divergence. And when you get a central bank divergence, even if the price goes against you, fundamentally, if you're a long-term trader, you know the big picture. You don't get shaken out of your positions. You don't get scared because you know where it's going to go and you know the reasons why you feel that way. If you know the reasons, you can then hold that trade, okay, and make money. So let's just look at what, if we go to, this is just a Bloomberg article. You can check this on Bloomberg. I'm not sure if the screen's going to share. But essentially, you know, there it is. This is a Bloomberg article. You see the yen tumbles the most in 17 months of Bank of Japan double stimulus. This was posted in Bloomberg on April the 4th, 2013. Okay. Massive fall. If we just look at this, you can see that it dropped down. It went up to 96.33. It tumbled 3.4%. Now, you're looking at the chart and you might be thinking, wow, that's a big move. Well, I've missed the move there. But you haven't missed the move by any stretch of the imagination, because this is a fundamental move. And when you know the difference between the two, you can start loading the boat, getting in, riding it up over the long term because of that central bank divergence. Okay? And that's as simple as that. So dollar yen, if we just go back to the charts a second, and let's just look at the chart for dollar yen and see how it played out. Here. Here's the weekly chart of dollar yen. This is where it was, that the line here, 94.20, but well, 9400 is basically roughly where it was before the Bank of Japan pumped their money into the markets. This line down here shows the date. This is the beginning of April, just after the Bank of Japan did it. Okay, so you can see from this zone here, I'll put a shape on it to make it a bit clearer. From this zone in here, from this area here, the Bank of Japan started their QE program. The central bank divergence began. We knew, you can read the blog, you can actually search that blog, it's there, why I was still short Japanese yen. Now, when I wrote that blog, this happened. So the price rallied, and then this happened. You see this big fall here. Okay, I'll mark this out. That's not very impressive arrow, is it? Let me just, there we go, that's better. There's the fall. It dropped all the way back down to 95. Okay, 94 or 94 in the end. Okay, this is when I wrote the blog. Everyone was telling me, Jarratt, you're an idiot. Dollar yen's been falling for weeks. You're wrong, etc., etc., etc. But I was like, no, what? I want to write a blog about this. I'm going to explain why I'm still confident it's going to go up. Okay, over the next 12 months, dollar yen will reach 110. And it wasn't because I'm a magician. It wasn't because I've got magical powers. It was just because I was looking at the central bank, following what they did, seeing how they traded. Very, very simple. Okay, and even though through all these drawdowns, even for those dips, instead of being scared, I was using these as an opportunity to buy back in at a better price. So if I was buying in down here at 95, that just gives me much more room to make a profit. Okay, but you can see, even if I bought at this peak, even if I bought at this peak here and the price fell against me, I'm still in profit today. Okay, so if you're a position trader, if you're a swing trader, it doesn't matter what's happening here. The fundamentals remain in place. The trade will play out, basically. Okay, it's only if those fundamentals change that you need to adjust your strategy. Okay, so that's a good example on dollar yen. Now, the reason I've shown that example is because I've been calling that for over a year. I've posted it freely available. Everyone could have read it. Everyone could know it. Everyone who's been following me in that time will know that that's basically happened. And essentially, that's a really good example of central bank divergence in action. Now, a trade we've got, well, an example we've got at the moment of central bank divergence is the euro versus the New Zealand dollar. Okay, just another quick example. This is happening right now. Okay, you can see this pair's rallied really hard. The reason it's rallied is because the RBNZ, the Bank of New Zealand, has forcibly started intervening and selling the New Zealand dollar. Well, the ECB are doing the same thing, but for real. The RBNZ are doing it temporarily to try and give some relief. The ECB are really implementing quantitative easing, negative rates. They're doing everything they can to weaken the euro. The New Zealand has like a 3.5% interest rate compared to Euro's 0%. So there's a massive divergence between central banks, and we're getting a situation now where the price is really rallying, and the higher it goes up, the more of an opportunity this is to get in and start selling this off to take advantage of that central bank divergence. And if we go to a weekly chart, fast forward 12 months, I'm pretty sure this thing will be much lower than where it is now, down in the 150s, at least down in the 150s, just like the dollar yen. Okay, but again, the benefit of this is it's an example that's happening right now. So I just thought I'd share that with you so you guys can keep an eye on that over the coming months. Okay, so again, 6 to 12 months, this is a good example of a fundamental play that's in action right now. Okay, so that's how, essentially, that's the trade examples, and that just illustrates the point of what I'm doing. Okay, so how can you do this? This is what we really want to get into. How can you replicate that? How can you replicate that trading and start doing this for yourself on your accounts? Okay, well, it's actually quite simple. So let's go through the steps. It's actually pretty simple. What I've done here is I've just prepared a little guide for beginners to trade the fundamentals. Okay, and while I'll talk through this, you can just have a read of it if you maximise your screen. But essentially, this guide is, if you just have a little read of that there, the goal of it is to basically show you what to do. So I use two main news wires. Okay, this is the news wires that are used in the city. This is what professional traders are looking for. First thing you want is a real-time news wire. Okay, I use a service called Randsquawk, which is paid. The second, there's also MNI. I don't have MNI, but I have Randsquawk. The second one is updated news, such as Bloomberg or Reuters. Okay, the big ones. Now, of course, these are lagging, but these give you a good, big overall picture. Okay, Randsquawk gives you everything that's happening as it's happening, so you can react in real time. So they will announce the news figures, the news releases as they happen. Whereas the Bloomberg article we just looked at on the Japanese yen, as I said, it's a bigger picture. Now, if you're day trading, you need to pay attention to the real-time flows, the Randsquawk, the MNI. If you're a swing or part-time trader, you need to be looking at the updated news, okay, such as Bloomberg. This will give you a feel for the markets, and we're going to go through the steps of this process in a moment. Okay. Now, as I said at the beginning, regardless of what your style is, if you're a swing trader or a short-term trader, you want to be aware of what's going on in both types of news. Okay, so there's 4 points. These are the steps you're going to need to take, and you can go away, trade. This is basically my trading process. Everything you need to know. This is how I do it. I go to the markets. I go to the news wires. First thing I'm looking for is which currency is moving. So is the article talking about the euro? Is the article talking about the pound? Whatever it is, then you need to know in which direction that currency is being moved. So is it forcing it up? Is it forcing it down? Etc. Very simple. Once you have those two pieces of information, you then need to know the reasons that the currency is moving that way. Okay? So not only, today the euro went up, but why did the euro go up? Because that will give you the reasons. That will tell you whether it's a fundamental move or a sentiment move. Okay? And it will tell you whether you need to be trading it longer term or maybe using it as an opportunity to start entering the market at a better price if it's fundamental, or if it's just sentiment, you can just take a quick day trade out of it, make 20, 30, 40 pips, whatever, but not to be holding it over the long term because it's probably not going to last. So that's what you need to know, the reasons why. And then finally, you need to know what expectations other traders and analysts have regarding the move. This is important because the market will very often tell you what they're thinking. So you've got all sorts of analysts and professional traders being interviewed, and they will interpret the news for you. Okay. So for example, when the dollar yen was happening, if we use that as an example, at the time we knew it was the yen that was moving. We knew the dollar yen was going up, the yen was going down in value. We knew the reasons why, because the Bank of Japan had just started a massive asset purchase program. And finally, we had traders and analysts suggesting that the dollar yen could get to 110, this was being touted around. The Bank of Japan said themselves they need the dollar yen to be over 110 in order to be useful to their economy, to be competitive, to help stimulate inflation. Well, if that's the case, then they're going to try and get it to pass 110. So effectively, that put the price out there, and that's how I knew to be kind of holding on for that 110 level. Okay. Even the bank themselves said it, but all the analysts were saying it as well. We pieced it all together, and that was the view. And that's what I was trading, okay? So I was trading this short term. Every time it pulled back, I'd buy it. I'd take 50 to 100 pips. But essentially, I was making lots of pips off that because we knew the direction, and I knew how to trade it, okay? So some days it might have been going down, but I knew the only reason it was going down that day was just sentiment. It was a short-term thing, and I could have short it in the short term, take some profits, but then look to buy it back in the longer term to take advantage of those fundamentals, okay? So essentially that's what I'm doing. So they're the steps that you need to take. Now what I recommend you do now, if you're interested in trading like this, if you're interested in turning your trading around, I'm not going to try and sell you anything. All you have to do is follow these steps. It's literally as simple as that. Go to Bloomberg. Let me just actually change my screen and I'll show you the exact sites that I use. Let me just change this here. Hold on. Just got all these options here. I'm trying to find the right one basically. There we go. Okay, sorry about that. Okay. So, what tools do I use? Okay, you might want to write this down. And all I'm saying to you is open a demo account, go and read the news, and just trade like this. You'll see for yourself how powerful it is. Okay, and then you will literally improve your trading. If you do that for 3 months, I guarantee you'll completely improve your trading to what it is now. Okay, and if you're not interested now, if you're thinking, oh well, I can't. If you ever get to a point when you're searching from different technical strategy to different technical strategy, if you ever get to a point where you feel like giving up, remember this webinar, and I urge you to just try this. Okay, it's free. Just try it. Trust me. 3 to 6 months. Just dedicate yourself to it for a few months and follow the fundamentals. Okay. So Bloomberg's the first one. This is Bloomberg. Bloomberg.com/news/currencies. It's free. You can find it. You can bookmark it. All I do is I just read the top 4 headlines every day. Sometimes I look down here and I'll look for headlines that interest me. For example, this one here, you can see this headline: Fidelity and PIMCO called Polars more dovish than Carney. So effectively, that's the Bank of Canada versus the Bank of England. So they're saying the Bank of Canada is more dovish, which means they're more likely to lower rates than the Bank of England. So that means buy pound CAD. Okay. just little things like that give a very good understanding of what's moving the markets, which way to trade. Remember the 4 points: which currency is moving, which direction the currency is being moved, the reasons for that, and of course what expectations other traders have. Okay, that's the first one. Then I use a site called centralbanknews.info. Okay, and you should be able to see that in a couple of minutes. Central Bank News is purely a complete aggregate of all the news sites, but only when they're talking about central bank stuff. So that keeps you tuned in to the central bank stuff. Okay, that's how you do it there. Okay, the second one is something called forexlive.com. Again, this is free. These will give you if you're wondering how to decipher which direction to take, look at what the analysts are saying. Okay, read what the analysts are saying and trade along with that. Analysts and traders will always be giving their opinions in the website. These news sources are vital. And finally, this is the real-time one that I use. This is Landscorp. Now this is paid. This is premium. This is what I use. But essentially, you can see this is just a headline of news. The handle of this, all you need to do is basically just watch it and just sit there. If you can day trade, if you're a day trader, if you're a long-term trader, there's no point having this. But if you're a day trader, sit there, watch the news come out, watch how the markets move. If you do that for 3 months, I guarantee you'll be fully converted to the fact that fundamentals are the way to trade. This is what's moving the markets. This is what's going to get you into trading. That's all you have to do. Okay, so you follow those sources. Okay, you follow the steps that I've given you, the 4 simple steps, and you just open a demo account and you just practice. And I promise you, if you dedicate to 3 months, you'll find trading so much easier. Okay, and that's basically what my strategy is. Now, essentially, what that link brings us on to is my next kind of venture, my next venture in terms of the role of Smile. We talked about this at the beginning. We talked about trading apprentices. If you want to trade for clients, this could be a decent opportunity for you to do that. So let me just get let me just find out this. Let me just share my screen back to the slides. So that's how I trade. Now what I want to do is I want to train up a load of traders. I want to have a team of traders trading like this that I can have trade and monitor and, you know, grow. So I want basically people who are interested in that. So what I do is train my own traders from scratch as a company. Because the way we do it now, we have traders. We have a trader will come in and say, oh, I'm a trader, I can trade clients. Okay, fine. But they come and go. We don't know what the strategies are. They're using all kinds of strategies. It's a very time-intensive process finding a good strategy that I'm prepared to invest my clients into. Okay, so that's the first thing. So we want to train our own traders. That's a much simplify the process. Okay, we're going to monitor and support them, of course. Okay, so we'll tell them what we're doing, tell them what they're doing wrong, keep an eye on them. If they've got any questions, if they've got any support, if they have bad drawdowns, if anything that they know, if they stumble, we're there to kind of keep them on track. Trading's not simple. It's not like a simple click and go. You know, it's a profession just like anything else. But we're going to provide that training. Okay. Then, if you're the right candidate or candidates, if it comes off and you guys or whoever they are can take on the trading, trade that way, and they get the results, and you can kind of manifest those results, and you know, bring it to something that's profitable, certain people will be offered a role as a junior trader at the firm. It's purely performance based, okay? So it's nothing. We're not going to dismiss people based on where they are or what they're doing. It's all about performance. If you can take to the strategy, if you can apply it just like I do, and make money from it, there'll be a role as a junior trader at the firm. Now, of course, you get a full salary for trading our clients. This is a proper, you know, it's a full, you know, it's a genuine thing. And of course a share of all the profits generated. Okay, so if you're interested in that, there's a link that Jana will share where you can basically sign up for more information. So there's a link that's being posted in a moment, in just a second, in the chat box. And you guys can just click that link, and all you need to do is just register your interest, and you'll get more information on this particular thing. That's obviously only if you want to trade for clients and become a trader. Now, if you want to learn more about the strategy, you'll get more information on that as well. You get a more in-depth, you still get the more in-depth training from that. So you can sign up if you want to just do that in your own money. You'll still get that in-depth training. Okay, it's available worldwide. There it is, and it's just a good opportunity. The reason I came here was just to kind of give it a little bit of exposure. Doesn't matter who you are, how long you've been trading, because we're going to train you. The only thing you need to be prepared is to be open to being taught from scratch, basically. Because a lot of people have bad habits. There's a lot of strategies that I see, and I just wonder what the hell's going on. But none of that stuff. David, it's performance based. What we're going to do now, you just register online to find out more. All the details will be there. We're going to do some Q&A in a moment. If you've got any questions, for some reason you couldn't find the page, registering for the page is the best way, but you can also email us support@jarrattdavis.com for more information there. Now, let's go to the Q&A. I think it's time to go to the Q&A. Has anyone got any... David, just answering your question, it's performance based, okay? So it can be done remotely if the candidate's the right candidate and they take to the training correctly and the performance and results of that, of course we're going to want them on the team. Raider me, no, I don't, Steve. Raider Medici, I don't know, unfortunately. So if anyone's got any questions, we've pretty much covered everything. Steve, okay, let me just try and figure out, if you send us an email and register your details, I can get you if you send an email to support, I'll get you a PDF sent out, and anyone else who wants that as well. I mean, we've pretty much covered everything. I think the presentation's been quite in depth. So if you want to learn how to trade like me, and you're interested in that, or you just generally want to learn more information about my strategy, about how I trade, so you can apply it on your own money, you need to register your details there, and you'll get all that stuff for free. Okay, I'm not here to sell anything, just to give you the opportunity if you want it. Chintu, all the details on the training, all the details on about the training, length of training, all the details, they'll be sent out to you by email. We'll give you all the details there. David, where am I located? I'm located in London in the UK. Our office is in London, right in the centre of London, a couple of blocks away from the Bank of England. Support@jarrattdavis.com. In fact, let me just go back. There's a support email. Larry, yeah, you have to. I mean, obviously, the right candidate. You have to go through a few months, well, several months of process. You can't just do it. But essentially, yeah. But we are launching this. This is a new thing that we're launching, and I just want to get a bit of, get a bit of, just get the word out there. So, because I remember when I started learning how to trade, I wanted to trade for funds. I didn't have much money myself at the time, and I really wanted to get into trading other people's money to kind of leverage up, which is what happened. I made my money, the massive bulk of my money, trading other people's money, to the point where now I've got more than enough money in my own trading account to not have to do anything. It doesn't matter what age, like I said, performance based, okay? If you're 85 years old and you're making 5% a month consistently with low drawdown, you are going to be one of my favourite people in the world. Doesn't matter, if you're 16 years old, just come out of school, it doesn't matter. It's performance based. That's the way the industry works. Our main concern as a company is risk. So if someone's smashing it out of the park 20% a month, my biggest question is going to be, well, that's too much risk. Because if you can make 20% a month, you can lose just as much. That's the way risk works. Barbara, we are considering all that stuff. There's the full package, the full program, so to speak, is going to be, if you register on that page, the full program will be released and you get all the details. Okay. Pete, I mean, for me, FX trading is 24 hours. Now, if we looked at the examples before, we looked at the fundamental. If you're a fundamental trader, You can literally check your trades. You can just basically, if you're a fundamental trader, you get into your position and you just check the news once a day, basically, just to make sure that everything's still going as it was. That's as simple as it is. So there's no hours for that anywhere in the world. If you're a short-term trader like me, okay, if you're a short-term trader like me, then I trade the London session. London and New York, they're the best sessions to trade because they've got the most volume, basically. Robert, okay, cool. You get the daily updates. That's cool. Fine. Well, there you go. You can click on that page and sign up, or you can email us. If you've got any questions you want to ask, just email support. Okay, cool. Anyone else got any questions, guys? I think this is a pretty unique opportunity. I don't think you're probably going to get this kind of opportunity again very often. Well, I've never seen it. So, oh, Robert, okay, you're UK. You're in the UK. That's cool. Yeah, Z, you'll get the emails come through. David, do you think swing trading or day trading results in more consistent profits? Well, the way to be honest, the way I trade is very often, sometimes I'll day trade, but like for example with this dollar CAD, I'd be comfortable holding this without a stop loss, to be honest, because I'm so confident that the pair's going to rally that even if it goes against me, I'm happy to hold. Some trades are not the same. Some trades are obviously a little bit more short-term minded. So what I'm saying is the way I trade, it kind of becomes a bit of a blur. So I haven't got swing trades and I haven't got day trades. Some day trades turn into swing trades. Some swing trades get cut short. So it's very difficult to say what, Okay, guys. Yeah, I mean, one of the biggest things we do is every morning we have a briefing, a London session briefing, and we just go over the overnight news. And we look at what's happened, what's moving the markets, and very often, like today, we were looking to sell the euro at 7 AM this morning, right at the beginning of the London session. The two things were just looking to sell the euro and buy the dollar CAD. If you look at the charts of what happened today, you can see how those two played out. So if you are interested in learning this type of trading, or you're struggling with your trading as you are, and you're kind of sick of going from technical strategy to technical strategy, and you want to actually finally understand why the markets move and how they work, this could be for you. Yeah, John, I don't trade anything else. I just trade Forex. Yeah. Well, euro dropped. It dropped this morning down to 126s, and it's rallied back up to 126.9. No, 125s, didn't it? It got down to 125.70. It started the day at 126.80. It got down to 125.70, and it's kind of rallied back to 126.30. Yeah, but overall, I mean, you certainly don't want to be buying the euro at the moment. Someone asked me earlier what was my take on euro dollar. Long term down. I think euro dollar's got a long way to go. I think it can get down to 120. I think because the ECB have got to do more. They've got to do more things, which means that it's going to be an even weaker euro. Okay, that's the key. That's why I think it's going to go down. The Federal Reserve are heading towards hiking rates. They're going in completely opposite directions. And remember what we said at the beginning, as long as the banks are going in opposite directions, fundamentally the pair will follow, that cross pair will follow eventually. Okay? Yeah. Carrie, yeah, yen will, and now it's got to 110. I think it will pop 110, but essentially, yeah, I think there's no reason why the dollar yen won't keep going up for a while. From there. Larry, what kind of salary profits can a junior trader make at your firm? It just purely depends. Basically, the details will be sent out. It purely depends on each candidate. For example, if you might get, I'll give you an example off the top of my head. We get a guy in London coming into the office, etc., every day, there in person. That's a different scenario to someone who lives in like Singapore, who wants to trade remotely, etc. It will all depend on the candidate. We'll sit down and talk. But those details will be sent out. It'll all, if you register your details, those details will all be sent out, and it will all be very clear. But it's a genuine offer. It's not, you can check the company, it exists. You can see the address, the phone number, give them a call in the morning. It's a genuine offer. It's there. It's not just some marketing stuff. Well, I'm not selling you anything, so that's basically, I've given you a strategy. All you need to do if you have any doubts is go away, trade it for 3 months, follow the news, and see how it works out. I'm pretty sure you'll be very pleased with the results. That's basically all I do. Okay, guys. Anyone else got any more questions before we wrap it up?